The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Monday, the 1st of February 2021. On the podcast today, Alan Green, CEO of Brand and Communications, talks about Bidstack. We argue about that. And listen, I apologise if I offend anyone holding it, but Alan's very bullish. He holds stock. I wasn't so bullish on the update, and I explain why. But, I like the tech. Like I said, I was very enthusiastic about it when they first launched. In fact, I was too enthusiastic about it, to be honest. But, we argue. We lock horns on that anyway. But it takes two people to make a market, I say. Venture Life Group, VLG, talks about Mosman Oil Gas as well. Also, on the podcast, I have two lists for you. As always, the top 5 most followed companies on Vox Markets in the last 24 hours, and the top 5 most liked RNSs too. By the way, you can check out these lists and lots of content at voxmarkets.co.uk. In fact, there's one there. Union Jack Oil confirms free-flowing oil at Wrestle Oilfield. Lots of other stuff there. There's a COVID-19 index as well. Biggest rise on that today is Gene Drive up 15% to 77 pence. Biggest faller, Tizion Life Sciences. That's down 7.8% to 147.5. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Alan Green, CEO of Brand and Communications. You're Al.
Very good morning, Just. How are you, sir?
I'm all right, you know.
It's February. We're finally out of January. It's gone.
The
longest month ever.
Yeah. Well, the figures on vaccinations are getting better, and that light at the end of the tunnel is getting brighter, I think. But it's just dragging on, this coronavirus now. It's been like a year, isn't it? And
yeah, it is. I think we all are. A bunch of guys that I go riding with, and obviously we can't at the moment because of the lockdown. We're quite concerned about one of our members at the weekend because he just seemed to sort of have a bit of a flip out on WhatsApp, and we think everyone's suffering at different levels, and I think we think the lockdown's got to him. So and the thing is, I think it's the monotony. It's like Groundhog Day every day, isn't it? You get up, it's the same old, and you can't get out and do stuff. You can go to the shops maybe and go and do the important stuff, but you can't actually get out and just move around like you could do before. So
it's grinding me down. I do feel like screaming sometimes, especially when you got kids and we normally have a break once a month. The mother-in-law takes the kids, but it's it's driving insane. I haven't had that, So just getting out to like I said, the restaurant. We didn't do a lot. We have a couple of holidays a year and all that stuff. But it's just grinding me down a bit. Anyway, let's say it's getting better, I think. And in fact,
it is. Yeah.
And also, did you see these figures from Israel? Israel percentage of population. Of course, they're a smaller population than us, but they're ahead of us percentage-wise on vaccinations. And it's looking very encouraging. And they're talking about reinfections of people who've had the vaccination is 0.04%. And the people who have been hospitalised after vaccinations, 0.002%. So it's very good. It's looking very good over there. And that's obviously a living, breathing, trial out there as it's going. And they're saying the efficacy of the Pfizer thing is around about just over 90%, 92%, I think. And I think Pfizer said 95%. But they say on a live trial, it's still very good, over 92%, which is very good. So once we get into this population, it's going to take a big chunk, it's going to give the virus a big punch in the guts, I think, and it'll sink to its knees a little bit. So it's heading in the right direction, but it's just slow, just grinds on. And we're looking
I think
forward.
it's just the sheer size of the country and the scale of the task in hand. It's going to take a long time, but obviously as the evenings get longer, we start to warm up. Then the summer or the warmer temperatures will play their own role in eradicating the virus too. And let's hope Matt Hancock's predictions of September it'll be under control and we can get back to some semblance of normality. But
no, he did say it'll be a free summer. It'll be free. If you look at it, phenomenal figures on Sunday. 598,000 people in one day were vaccinated.
Yeah.
We're up now close to 9 million people vaccinated. I think by the end of this week it'll be 10 million. They're on track for that target, and they keep doing that, and it's going to get faster. I mean, as these companies sort out, like AstraZeneca and Pfizer, sort of their supply chains a bit, and start producing more, it'll get better. And of course, in the spring, then you've got Moderna coming on online vaccinations, and Novavax coming later. So it's I mean, this is the hardest part here. I think we're trying to get up and running to 100 miles an hour from a start, a dead start. It's hard, but it's doing well. Okay, let's look at companies now. I noticed Bidstack came out with a trading update today. It's down. Am I looking at it? They're down 32% at the moment, the share price. So I'm assuming it's not been received that well. What's your thoughts?
Well, I think it hasn't been received well clearly by the markets, but as often happens with these with technology companies when they're advancing, and the old saying, the stock market is better to travel than to arrive. What we've seen today is really a trading update where we knew most of the content, and that, of course, is revenues. Well, in fact, the revenues were ahead of expectations. I think the market was expecting 1.5 million. They've actually come in with 1.7 million for the year versus 140,000 last year. Cash at the end of the year, 2.76 million. That's cash, including a payment that arrived in January. So they've got 2.76 million in the bank. Obviously, an increased loss before tax. They've now got a headcount of 69 staff versus 20 the previous year. But of course, they've got relationships in place now with the major agencies: Dentsu, WPP, Publicis, Omnicom, Interpublic, etc., Havas, and of course the games publishers Sega, Codemasters, and Ubisoft. And they've worked with brands like Burberry, Volkswagen, BMW, KFC, Doritos, Duracell, to name but a few. So they've expanded the network. They have spent a long time basically validating the platform and validating an earnings measurement structure, which is now in place. But James Draper said that the sales cycle has now lengthened, and companies, as they said earlier in the year, have moved from test status to on-plan status. But of course the sales process that they anticipate is going to take slightly longer than has done previously, and I think that's primarily the reason for the fallback in the shares this morning. The thing is, they've gone through the hard yards. They've gone through the development phase now. It's now out there in test. It's being used by all the key partners in the industry, and they've said that they believe the strategy they have is now right. They've got the commercial, operational, and technological data in place to exponentially grow the business, to accelerate, and also to accelerate their progress. So I think. Well, in my view, I still think the shares were screaming by at 12 to 13p where they were previously. Where they are now, I think it's an absolute slam dunk.
Why do you say they're screaming by? Because what concerned me about this update, right? First of all, I mean, they were valued at 44 million before this update, 45 million. What worried me about this is that, listen, the revenue went up to 1.7 million, above what we thought was 1.5. But I like the tech. I've always said that, but they're seems to be having issues monetizing it. I don't know what the issue is here. And like I said, the first come to the market, I think 5.6 million was their first year target. That dropped down to 1.5 the next year, and they said sales will be back end loaded because technology, the developing technology, but then people start spending. Now, the cost of that though, that 1.7 million. it cost them sort of an increase in 1.8 million in losses because they've gone up from 5.36 to so literally a pound of revenue is costing them more in the losses, than a pound of that's quite worrying. And also that phrase where they said there. However, given recent experiences, the board believes the current pandemic may well result in further lengthening of sales cycles. To address this, Bidstack's strategy will be to concentrate on appropriate implementation of its technology, even if it's at the expense of some short-term opportunities. So that's going back to where they were previously, because they said that before. That was the last reason why the revenue dropped, because they were embedding technology, working on technology. So they're doing that again. Well, so this is, again, they've pushed out revenue. And what they say, if you've got 2.35 million or 2.45, they burned that in the last 6 months. They're going to, and I can't see them becoming profitable. So I'm assuming they're going to have to do a fundraise. I love the tech, but it just seems to take a long time to be generating, money or revenue or significant sales. I'm thinking, is it going to get there? That's what I'm starting to think about now.
Well, somebody made a comment to me this morning that why didn't they raise money when the share price was sort of 9p, 10p, 12p, or whatever? We're also forgetting something. And that's actually the run rate. Now, revenues have accelerated. James Draper said that the revenues would be very much second half weighted, and of course they have been. So if they carry on generating at the current level, that's anticipated to be a run rate of around 5.5 million on the year. Now.
Say again. Sorry. Say again.
So revenues are second half weighted, as James said last year, and of course the revenues jumped up from I think 100 and something thousand in the first half up to 1.7 million on the full year. So in other words, as the tests that the companies were undertaking rolled out from tests to on-plan advertising spend, those revenues accelerated. Now, that will clearly grow, but what he's saying is it won't grow at the rate that perhaps was anticipated previously. Nonetheless, if the company's turned over effectively 1.6 million in the second half of the year, that would indicate a much higher run rate. And a lot of people in the industry.
I don't know if it'll go up any higher next year. They're not looking at. They've just said they're not looking. I mean, to them now, that revenue or short-term opportunities is not a priority. It's about tech development. So I don't think that they're going to be ramping up again revenue-wise. Well, it doesn't say that to me in that update. That's what I'm worried about. I'm just thinking. This tech is taking longer to monetize, and they're not saying in this update. They didn't say anywhere in this update that revenue is going to uptick in the second half of the year. They didn't say that.
Well, James said our native in-game strategy has been to take no shortcuts. This is now paying off. Clients around the inventory, clients planning around our inventory, and with the technology, they're able to report transparently on the performance of campaigns. So they've now got the clients in place spending the money. Now, even if the clients that they've got just carry on spending money, my point is that the run rate on the full year is going to be somewhere in the region of 4 to 5 million, which is what people in the industry have been saying. They've been looking and saying, okay, so the second half revenues have now jumped up by, I think it's from 100 and something thousand in the first half to 1.4, 1.5 million in the second half. Now, if that run rate just continues over the year,
you can't extrapolate that like that and just try and multiply it up.
No. But we're going to get some indication on that in the full year figures, because obviously we'll have a post-year.
What I'm worried about is people got carried away last time, right? People got carried away. So when they announced the last trading update, people got carried away because they said they're going to exceed the expected revenue target. And let's be honest, they did it by £200,000. And when you look back at the last target was 5.6 million, and this is now 1.5, then I'm just saying, lower expectations, everyone. Don't expect it to be 10, 5 million, whatever, because as yet it doesn't. They don't seem super bullish in a revenue upgrade in this trading update. If they would, they'd say it, I think. And so they haven't said it.
I think, in my opinion, James Draper took such a slating from various market commentators and people in the industry a couple of years ago. He's been actually very downbeat and very cautious in his statements from that point on. And that's reflected, I think, in the last trading statement and prior to. the point is, you're right. We can't make forecasts and expectations.
I think they should have said in the last one. In the last one, they said exceed expectations. They should have said slightly exceed it. I mean, not because I saw people banding about 5-6 million, on Twitter. Calm down a bit. Calm down.
But that's a run. Yeah, but that's a run rate. James Draper said the revenues will be second half weighted, very heavily second half weighted. That's proven to be the point. Now, those second half revenues, those clients are still continuing to spend. They're still continuing their spend throughout the year. There'll probably be one or two added to that, but as opposed to the rush of clients that were initially expected, that rush probably will slow down now, so we might get so many clients. But my point is that run rate from the second half of the year will continue into the first half and the second half this year, which could indicate, as people in the industry have been saying, there'll be a run rate on the year of maybe revenues of 5.5 million.
Well, it says in this is while this undoubtedly proves the system works, in 2020 fill rates for native in-game remained in low single digits, and they said. As the Bidstack sales team matures, they say they're going to remain significant scope for organic growth. So I don't know. I just think now it's not. We've tried to pre-guess this quite a few. I did the same thing when I first got involved with Bidstack and I bought stock and shares. I was really excited about it. And I got carried away and I got really over enthusiastic and I talked about it in massively bullish terms and I got slated for it when it came back and they missed, and I started selling because they missed their revenue target, and that was the whole point. And now it's happening again. It seems like. So I'm just saying to people, keep your expectations in check because we've been here before, and they've not delivered on the revenue side of it.
No, I think that's a very sweeping statement. I don't think you can say that, but that they delivered in the second half of the year.
I mean, losses 7 million now. Losses. What we're saying is they're not generating real value. I mean, as in cash generation, they're losing money, and they will continue to lose money. So they will need to raise money this year, within 6 months, probably before the end of the first half, because they will have out of money by then. So. Well,
if they've got, they may need to raise some money during the year, but if they've got the run rate that of 5.5 million on the year, then they've got 2.76 million in the bank.
That's coming from the top of your head. That figure of 5 million. That's you're making that up. There's no fact in that at all. You're just surmising that. That's isn't it? I mean, you just guess. It's a guess, that, isn't it? It's guesswork.
Well, just on the basis of the revenues they've generated in the second half of the year, let's say those clients just continue to spend, they don't win any other business at all. You've then got revenues of 3.5 million. Okay, so put the 2.76 million on top of that. If that happened, they probably need to raise some money toward the end of the year. Okay. Now, if they do add clients to that, and they increase
2.3, that 2.3 will last some. I don't know.
No.
6
They've
months.
got 3.7. Look at what they say in the statement. They've got
2.7. Yes, but I mean, they did that in the last 6 months. So
2.7 million. They had a large. They had a large.
5.9 million cash at the end of. I know, but end of H1. End of H1, they had 5 million cash. Right? They went down at 2.35. So if you work that out, they're not far off within 6 months using all that money up.
2.35, but they didn't have the cash run rate that they have now. That's my point. So
you know what? I know, but that's what I'm saying to you. It's not getting through. We don't know the cash run rate. We don't know it.
If they,
I know you say if. I know, but we don't know it, do we? No, I'm just saying we don't know it, do we?
If they'd lost the clients that now have the advertising on plan.
I know, but answer one question for me. Do we know what their run rate is?
They would have declared that. They would have said, the clients tested with us, they've decided not to continue. They haven't said that.
They wouldn't say that. They wouldn't say that at all. They don't have to say that. We don't know what those clients are paying, whether it's test spend or what. They may test and then not go ahead with it. They won't say that. They won't say they lost a client. No.
It's on plan. They're saying it's on plan. That's my point. So you have revenues that are on plan. You've got clients that are continuing to spend money. So therefore, if you extrapolate the numbers from the second half of the year and you apply those to this year without adding any further clients at all, that's a much healthier turnover and something that, given the current cash burn rate, should get them to the end of the year, given the cash they have at the bank, without needing to raise any further money. I'm sure they will raise further money as the year goes on. But let's just say they do win some more clients on top of that. who knows? They may get to a point where they could hit break even end of this year, early next year. But that is speculation.
I know it's fair. I love your optimism, Al, as a shareholder. I know it's always nice to be optimistic, but we don't know that. We don't know that.
You've got to look at the second half of the year, Just. That's what
I
I'm
know,
saying.
but I can't see them going from a £7 million loss this year to breaking even next year.
They've got 2.76 million cash in the bank. So if you just
not now. That was the 31st of December. That's a month gone by.
Well, yeah, but they said with the cash payment at the end of January, that then increased to 2.76 million. So really, where they are now, they're at 2.76 million.
Okay. Yeah.
So you then add in the revenues from the second half of the year. If those continue, they don't add on to that. That's probably further 3.5 million on the year. So at some point later in the year, they will have to raise money. There is not a screaming cash call requirement right now. That's my point.
No. Of course, there's not. No.
And also, I think we'll hear a lot more from the company when they declare the figures, because obviously we'll have a post-year-end trading update as well, and some forecasts on the year, so we can get some idea of the actual revenue flow. But
all I'm saying is, this company is a tech company. It's in a hot space. I loved it, of course, and I love the tech, and it's easy to get carried away with it. But when it comes down to reality, and we've seen revenue generation, it basically underachieves on that side of it. And so all I'm saying is, be careful, don't get carried away with it.
Do your own research. That's right. But given the fallback to share price,
listen, no one was more bullish on this stock than me. I loved the tech. I loved the sector it was in. James is a good talker, and he seemed to have his head screwed on. And also, another positive negative really, Derek Wise stepping down. Why is that?
Yeah, there's that too. But I mean, Derek Wise he's a mercurial fellow, and he's of course worked with worked at Oracle, former CTO of Grapeshot. So he's onto other opportunities. Maybe he's seen he can do what he can. Who knows? Yeah, he's gone. But look at the advisory board. There's anyway. Yeah, we can go around in circles about this. So.
All I'm saying is, look for companies that they've got a sort of pipeline, a road there to cash generation, profitability, and they've just stated that they're going to head there, because at the moment we don't know where this is. That's real value generation. That's generating real cash, and that's sustainable growth in a company's share price when they can achieve that. As yet, we haven't seen that with Bidstack. I still I'm still open to it. I still think, if it's going to work, it could do very well. But as yet, they seem to be having teething problems. It's not smooth sailing, is it? If it is cutting edge tech, you never get smooth sailing. Of course, you have to take the rough with the smooth. All I'm saying is, keep your expectations in check, everyone. Don't go saying it could be 5 million, 6 million, 7 million. You don't know. Wait and see, because we've been here before. Okay. Anything else? What's next, Al?
Okay, Venture Life Group, VLG, Epico VLG. This is, of course, the self-care company. It has a nebulous product range of products for self-care. That's oral care, mouthwashes, skin care, pain relief, cosmetics, and a raft of operations. They have a distribution and manufacturing hub in Milan, in Italy, and basically have grown over the past few years through acquisition, through strong cash generation and careful management of the business. So we to bring us up to date, there was a big event in October last year where the company announced that surveys and tests were being undertaken at Cardiff University, testing the efficacy of mouthwash on the SARS-CoV-2 virus, and it was established in the test that the mouthwashes that were used, the CPC-based mouthwash, eradicated the virus completely within 30 seconds. We're due the full trial results on that, and in an update today, they said the Cardiff trial was still underway, but the mouthwash used in that trial was Venture Life's own brand dental mouthwash, and of course the sales of that on the back of it was featured all over the national press. Sales rocketed. So the shares have traded as high on the year as £1.18 or 118 pence, as low as 20 pence. Currently trading 85p as we speak this morning. The company announced a trading update today where it unveiled that revenues on the year had increased 49% to 30 million, and adjusted full year EBITDA the company said would come in at least 6 million sterling, which is a big jump from last year. Also, the company's own brand sales jumped to 50% of sales versus 33% last year. And one of the company's first acquisitions, PharmaSource, also performed ahead of expectations. In December, the company raised 34 million in an open offer, and a further 2 million. Raised 34 million, and in an open offer, raised a further 2 million at 90p to make 3 acquisitions. First of those is Project Vulcan, which is gives the company commercial rights to 4 brands in oncology support. The company have already got experience of manufacturing in this area, so it's a very good bolt-on for them. Net sales from that company at around 3.5 million a year, EBITDA of 1.2 million. Then there's a heritage oral care brand in the UK the company are targeting, and again, net sales there of £3 million on the year, plus a heritage dermatological brand in the UK, and it also dovetails very well into the Venture Life Group network. So the cash that's been raised will basically go to make those acquisitions, and as the company said, it's got net cash of 35.5 million in the bank, and also forward order book, which is also ahead of last year. So what I like about Venture Life Group is it's got an incredibly diverse range of brands. It's got excellent distribution channels through major stores like Asda, Superdrug, Lloyd's Pharmacy, and a raft of other distribution channels. And it's just continuing to grow through acquisition and through carefully using and utilizing its manufacturing facilities to manufacture and distribute brands throughout the UK, Europe, and the world. So we'll have the full year figure soon. We'll also have the update from the card trial on the COVID mouthwash test, and that will be, I should think, in the next 4 to 6 weeks. So watch this space. But I think Venture Life still offers excellent growth opportunities at this level.
VLG. Yeah.
VLG. Hashtag VLG.
Yeah, I'm watching. It's done well, the share price, isn't it? It seems to be consolidating at the moment, so it's good. The share price is going down. Do you know what? The RSI is just about a touch 30, which is that's known as oversold. I mean, it can stay down there for a while, but it's a better place to buy than above 70 sometimes. Or more often.
Oh yeah.
So cool, marvelous VLG. What's next, Alan? Anything else?
Okay, so another update this morning from a small oil and gas company, Mosman Oil Gas, MSMN is the EPIC code, and shares on Mosman have traded on the year as high as 0.26p and as low as 0.05p, currently at 0.19p, so up today on the news today. So Mosman Oil and Gas have a raft of oil and gas assets in East Texas. The flagship facility there is the Falcon 1 well, which is started production in December, is now producing 180 barrels of oil per day gross, and it's set to double its average daily rate for the 6 months for the subsequent 6 months. There are a number of other projects underway there, and today the group updated on the Stanley projects, where the average production during January increased to 210 barrels of oil per day from 139 barrels of oil per day average in the 6 months running up to December, and also another Will Stanley 5 is going to be drilled in that area in quarter 2. So there was there was a broker note out last week from SP Angel, written by Sam Wahab, looked in detail at the potential for the group in terms of production this year, and they estimate production is going to rise by 700% this year, and they're going to end the year with net cash of $2.6 million as opposed to 230,000 they ended the year that they ended this year with. But that's the actual production part of Mosman Oil and Gas. They also have an asset in Australia, or two assets in Australia, the Amadeus Basin in the Northern Territory. This is close to onshore fields known as Mereenie, Palm Valley, and Surprise. They have the West Walker permit there and the Mount Winter permits. And the broker estimates that the Amadeus assets, those two assets, could treble the Mosman market cap. There has an unrisked value currently worth $172 million. So that's what I like about Mosman. It's a small stock, but you've got production, you've got cash generation, cash growth potential, real growth potential this year, and then you've got the blue sky potential with the Amadeus asset too. John Barr is the exec chairman who runs the company. He's formerly TNG, also worked with Thor Mining and Sherwin and Aquarius Platinum. Andy Carroll, who's the technical director with Australasian Energy and High Peak Royalties. And John Young, who's the geologist in the group, 25 years experience, worked with Bandex Gold and Trek Metals. So a very exciting year in prospect for the group. And the other point to note with the company is that some of the other assets in the Texas basin, there are two assets that were listed for sale. One is Arkoma, which is going to be sold later this year, and the Welch asset was sold again just after Christmas, sold for $420,000, and the cash was received by Mosman Oil and Gas. So the company is very well funded to basically develop the oils that in the Stanley region, and of course make investments if needed into the Amadeus Basin. So yeah, very strong year in prospect for Mosman.
Marvellous. Well, I'll let you have that one. We won't lock horns on that one because we've locked horns on Bidstack. So I'll give you a free pass on that one, Al. All right?
Free pass, okay. All right, cheers, Joss.
Marvellous. Cheers, Al. Thanks for that, and we'll speak to you next week.
Cheers, Joss. Speak to you next week.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5, Blue Star Capital, non-mover at 0.18. At 4, U Group, down 3.8% to 190. At 3, On the Market, £1 their non-mover. At 2, Alien Metals, up 18% to 1.475. And at 1, Supply Atme Capital, the non-mover, 0.51 pence. All right, top 5 most read RNSs are as follows. At 5, Open Orphan, contract extension with Kana Biosciences. At 4, Asia Met Resources, shareholder requisition of general meeting. At 3, Bidstack Group, trading update and directorate change, I should say. At 2, Avacta Group, Afizel 7.3 million Series A financing, and at 1, that's Remote Monitored Systems commissioning delayed. That's it for the podcast. Thanks for listening. Muchos appreciados.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.